for our next set of sessions. But first, London remains a leading financial ecosystem, even in a rapidly changing global economy. But how resilient are we to global competition? Can regulation and necessary risk-taking operate hand in hand? And how do we shape our capital markets for the better as we work towards a sustainable future? Well, to ask those questions and more, I'm delighted to welcome onto stage Kristy Duncan, CEO of Women in Payments, and to answer those questions, CEO of the London Stock Exchange Group, Julia Hoggett.
Good morning, everyone. It's a pleasure to be here. I'm so excited to be chatting today with Julia Hoggett, who is CEO, we all know, of the London Stock Exchange. Julia, we've got lots to chat about, so let's dive right in. Since you've started at LSE, the Capital Markets Industry Task Force was launched to support wider regulatory reform and position the UK capital markets to better serve us in generations to come. As chair of the task force, can you bring us up to speed on the work that you've done to date and the progress that's been made so far?
Yeah, absolutely. Well, firstly, it's a delight to be back, so thank you for having me. In terms of the reason the task force was created, I care passionately about our capital markets, but I care about them for the core purpose that they serve. Their job is to be a convener of capital between those who need capital and those who have capital and serve us from an objective. A lot of the fintechs in the room are doing something very, very similar. And sometimes over the years, we've lost sight of that in the way we've thought about our capital markets and their evolution. And so the Capital Markets Industry Task Force has a terms of reference, but operates to a vision statement. And that vision statement is pretty simple. How do we create the best possible environment in this country for great companies to start here, grow here, scale here, and stay here? And how do we make sure that our capital markets have the best possible assets for our policyholders, our pensioners, and our savers to have enough money for life events and old age? Now, on one level, that barely even touches an Economics 101 articulation of what a capital market is for, but actually is very rarely the lens through which we look at our efficacy. So the Capital Markets Industry Task Force was formed by people who operate at all elements of the industry. It has deliberately got 9 members on it, 5 of whom are issuers or asset owners or managers. So we have a private company CEO represented, public company chairman represented, venture, asset management and pension and insurance. I chair it as CEO of the exchange. We have the legal profession, the advisory profession, the investment banking profession represented as well. But it is very deliberately to bring all ends of the ecosystem together. And at the moment, we have 4 work streams that we're focused on. The first is how we enhance the amount of risk capital in this country. So you'll have seen an awful lot of reporting over the last few weeks about the de-equitization of our institutional pension and insurance money. To be blunt, we've triggered quite a lot of that conversation because we think it needs to be had. And actually, we do need to look at how we ensure that the enormous volume of institutional money we have in this country is directed to the vibrancy and the growth of the economy and the companies that are created here. So that is the first sort of major exam question. The second is the nature of the expectations that are placed on companies when they list in the UK. We have created over the years a number of rules which actually don't exist in other jurisdictions. And we have to ask ourselves the question as to whether they afford companies the right flexibility to really be able to drive the strategy and the dynamism they want for the global and consequential growth that they want to generate. And so that is the second of the projects. The third is really how we enhance the ecosystem for what we describe as consequential private companies in this country. How do we make sure that we're taking all of this amazing dynamism that exists, coming out of universities, coming out of the fintech sector, and make sure that we have the right ecosystem so that companies know how to go through that start, grow, scale, stay continuum. And it isn't the hardest thing that founders have to do to find the financing. The hardest thing is coming up with a really good idea and then executing it. So how do we make that more straightforward? And that includes things such as spin-outs from universities. How do we rock up as UK Inc. in those circumstances rather than having lots of different versions of it? And how do we create the alignment in training and support between the technical know-how and that entrepreneurship know-how? And then the final one is something that was also mentioned in the Edinburgh reforms. It is going to have to change its name. It is colloquially known as ITV. There's a certain TV company that may object. And fundamentally, ITV stands for intermittent trading venue. This is to create the opportunity for the UK to have the world's first scale-up crossover market, where private companies can have moments of public liquidity on their secondary securities that will enable angel and seed investors to get out, will enable venture and PE firms to participate and to generate some liquidity, will enable institutional investors to start following these companies at an earlier stage, which they all want to do, and will also provide liquidity moments for staff ahead of a big takeout or ahead of an IPO. The theory being, how do we make sure that we have enabled the right financing environment for companies as they move all the way through what we describe as the funding continuum, and making sure that that has been done. And there is more commitment to do that in the UK now than at any time in the last 25 years that I've been in the ecosystem. But I do think it needs to be a partnership. I was a regulator for 7 years, and I also know that we can't just always point to the regulators and say, you solve that regulation. Sometimes, actually, as an industry, we need to do things differently to produce a different result. And part of making sure that all of us on the task force can actually go back into our own institutions and change the way we do things around here is so that we can actually generate different outcomes. We have a brilliant capital markets here. We have one of the globally leading capital markets. We need to make sure we just connect all the dots more effectively together.
So much happening, and it's so exciting, and I'm really, really excited to see the progress moving forward. Thank you for pulling all of this together. So, Julia, you've mentioned often that climate change and the green transition is one of the biggest challenges of our generation, and that the LSE actually has a critical role to play. Can you talk to that? Is the UK in a good position to get us to a green economy in a reasonable time, and how can capital markets help to prioritize that agenda?
Good question, lots of sub-questions in it. But let me try and summarize. I actually think the UK is further ahead than an awful lot of other jurisdictions in terms of the framework that it's got in place. I describe it this way, capital markets are based on the valuation of the net present value of future cash flows. What we want to be able to get to is a capital market that can actually evaluate the net present value of future cash flows adjusted for their impact on the planet. And an awful lot of the things that will facilitate that happening actually are in place in the UK already. So we have TCFD as mandatory, so the Task Force on Climate-Related Financial Disclosures. That is actually mandatory for listed issuers and asset owners in this country. And we are introducing transition plans for companies actually to be able to describe overtly how they are getting from where they are today to a net zero commitment that they make on a science-based basis. And so actually quite a lot of the ecosystem in the UK has already been designed and built in a way that is forward-thinking. I always think of it as, if we think about the accounting rules and the listing rules and the market abuse regime that we have for the sort of classic market, as it were, what's the kind of mirror image of that for a climate-adjusted evaluation? And we have ticked off more of those boxes. More to come with ISSB and taxonomies, et cetera. But actually, for me, there are 3 things that we can do as an exchange. The first is actually that we can generate mechanisms by which capital can flow into the green economy and into the transition. Gil Scott-Heron may turn in his grave with me stealing his line, but one of the things I have always said is that the transition must be televised. And one of the great benefits of the public markets is they produce a level of public disclosure and scrutiny that enables us to hold everybody accountable for moving on that transition. But we only get there if the entirety of the global economy moves. So we have to make sure that we're setting standards that the entire global economy can move to. So we look at that through 2 lenses. Firstly, how do we make sure that capital that is already going into the green economy and the transition is appropriately identified and recognized? But how do we also recognize that value will change as we move towards 2050? And that, to be blunt, is a proxy for a carbon price. As companies value getting to net zero more, then actually how they think about that value changes. So we created what we think is the world's first voluntary carbon financing market last year, deliberately to support the financing of projects that would not otherwise happen that go to reducing the amount of CO2 that's in the atmosphere. And the simple logic for that is that you don't get a carbon credit unless you do something genuinely additive. The value is in the carbon credit. How do you create a deep and liquid market for carbon credits unless you've got a whole load of projects that are producing carbon credits? How do you get a whole load of projects producing carbon credits unless you have a deep and liquid market? You have a chicken and egg problem. So we've sought to address it by creating a financing market that generates those projects. And that fundamentally has one real-world KPI. Yes, I care about how many companies have the designation. I care about how much capital is raised. But in 20 years' time, the real world KPI will be how much carbon is taken out of the atmosphere because that market exists. And that's really the test. So we get the opportunity to produce the pipes and plumbing that can genuinely move capital into different places. We also have the ability to set standards and rules and be a convener of the policy-making discussion. And we have the ability to produce the data that enables people to make those decisions and make that data available. So any listed issue on the LSE gets as part of their listing an understanding of how they're understood from an ESG point of view, as free as part of the product. And that's one of the things that we've done to try and move the dial as much as we can.
Absolutely fabulous and so important for our generation, generations to come. As founder of Women in Payments, diversity, equity, inclusion is really, really high on my agenda and near and dear to my heart. And just last month, LSE celebrated 50 years of women being first admitted to be members of the LSE. I'd want to invite you, Julia, to talk a little bit about diversity, equity, inclusion, DEI, and why that's important and where that sits on your agenda.
Well, I've been talking about diversity and inclusion in the city for the last 20 years, so I'm not going to stop now. And I also say that have balcony will use it or have soapbox will use it. At 5'1", I kind of need a soapbox as well, so I'm never going to complain. But we feel very strongly that actually we should stand up for, because we have this convening power, we should stand up for what we believe in. And we wanted to make a big point about the 50th anniversary. One of the first points I made is we can now finally say it's more than 50 years, because it's dreadful that it was 50 years. And it was actually done under sufferance. It was done because the exchanges in the UK were merging and other exchanges actually had female members, rather than because the denizens of the LSE felt that it was a good thing to do at the time. In fact, they'd resisted it for many years. I'm afraid I'm going to keep saying that, because I think it needs to be called out, and we need to remember our history and make sure that we don't presume that all of that progress has been banked. The other thing that we did was we actually commissioned some research on female involvement in financial services in the time since women had become members. And I hope there isn't a corollary, but actually the number of women in financial services peaked in 1997, which is the year I joined the industry, and has been going down ever since. I don't think there's a causal connection. I hope there isn't. But one of the things that was the trigger for that is that an awful lot of women were in administrative and other roles that were taken out by digitization. It is absolutely essential to me that in this next generation of the evolution of our financial services industry, which a lot of you in this room are drivers of, we don't lose sight of that. How do we make sure that we don't create the same exclusionary outcome that actually has happened over the last 20 years? So we feel very strongly that we need to stand up for it, and we need to also put our money where our mouth is. So we're very proud that at LSEG we met our Women in Finance Charter of 40% senior leadership. We have a female CFO. We have a very diverse board at LSEG, but we choose to do exactly the same at LSE PLC. So we have a female CEO, we have a female CFO, and we have a board that is more than 50% women. So we make sure that we, as the exchange, also lead by example as well.
Well, and that diversity is so important in bringing diverse perspectives to the industry and to the work that you do. So Thank you for doing that and continuing to push that agenda. Because if we don't continue to push it, it can potentially slide back, which is not what we want.
No.
Don't want to lose all that progress. To conclude our discussion today, Julia, I mean, we could talk and talk and talk. There's so much that I'm learning here, and the audience is really keen to hear more about. But we've got this Innovate Finance, highly focused on fintech audience, and I want to get you to fill us in on the direction of LSE's in terms of public versus private funding. And I know a lot of fintechs are often struggle looking for funding in the early years. And can you talk a little bit more? You mentioned that earlier, but can you expand on that a little bit?
Yeah. So one of the things that I have thought about for a long time, and I mentioned this in the first answer, is this concept of a funding continuum. How do you make sure that actually as an institution, when you're starting out and you're setting your stall out for your strategy, how do you have a clearer sense of where the funding is going to come from at each stage of your evolution? The simple reality is that companies are going public later and later in their life, if at all, and the private markets is a very dynamic space for people to get financing. Actually, one of the things that venues do, as I've already said, is we're a convener of capital. We actually create the pipes and the plumbing and the mechanism by which people have a level playing field by which those who have capital and those who need capital can interact. And as a convener, I've always wondered, to be honest, why, if you think venues are this really powerful democratizing network effect, would you not want to do that across the funding continuum rather than in the public listed markets alone? And the only answer I could come up with is because that's all we've ever done. Well, I'm not certain that's a good reason. Most of you in this room have been looking at problems sideways and going around them the back and coming up with a different solution. Well, we've sought to do the same thing. And so we have a vision statement at the LSE that we want to be the first exchange in the world that is genuinely indifferent as to whether a company is public or private. We want to create venues that enable the convening of capital, whether you're a private company, whether you're transitioning to being a public company, or whether you're a public company. So we have already invested in a fintech called Flow, which enables private companies to make themselves visible to venture capital firms and to undertake primary transactions. That has already got permission and is already doing that. We are working with the government on this intermittent trading venue that would be the crossover between the two. And we are doing an awful lot of work with the Capital Markets Industry Task Force to enhance the dynamism of the public markets. So we're thinking about it from let's take a step back, look at how companies evolve and develop today, and make sure that our capital markets are fit for the future of that reality of how companies need to operate and want to operate. And so it's a very different way of thinking about it than it might have been even 2 years ago. But what I find is fundamentally it's about an awful lot of construct for financial services is how do I solve my clients' problems? And actually democratizing and making more straightforward access to capital has to be something that I think we in the UK have done traditionally very well. We've had some very forward-thinking regulation in that regard, and there's absolutely no reason why we can't keep doing that and keep moving forward with the evolution of the way our capital markets work. So that's what we're incredibly focused on at the moment.
Well, I think this audience certainly appreciates that, Julia. I think it's important for us to have better access to capital through all stages, as you say, of the growth of fintechs and all organizations. And that'll certainly help to promote the agenda of innovation and entrepreneurship to support the UK economy. And it's fabulous to see the UK as the world's leading exporter of financial services in the world. So thank you so much for all of the work that you do there. And thank you for this chat. It's been wonderful to hear all about the work that you're doing on your capital markets reform and the drive to a greener economy, and of course your equity, diversity, and inclusion agenda, and moving us towards more equitable access to funding. So thank you so much, Julia. It's been a fabulous discussion.
Thank you very much.